Don't want to break an eardrum. Don't want to break an eardrum. Ladies and gentlemen, you know what time it is. Headphones in. It is Mailbag Monday. Good to see you all. The show has been so much fun. We crossed 35,000 subscribers on YouTube. We're almost at 36. Thank you guys for the support. If you haven't already, hit the like button, hit the subscribe button. Let's do this damn thing, shall we? I'm talking to you all at a Bitcoin price of $115,220 US dollars. We're about 6.5% down from our all-time high, which is $123,060. For those of you that are like, man, you know what? Eastern time, Central time, Pacific time, those are stupid times. I timestamp my life in Bitcoin block height. Hey, I respect it. I'm talking to you at block height 908,642. Timestamp that. Time chain that. What the hell is going on, you guys? What a fun little corner of the internet we have for ourselves here. All right. One of the feedbacks I got from last week is to go even faster. We want to get to the good stuff. I want the juiciness. I want the juicy stuff. Here's the comment that really sparked it all for me. Oop. I need to zoom out so you guys can see it. There we go. The comment said, "Great show, Jack. Cool piece on strike. Very informative. I'd prefer it to be at the end. Reason being, it makes it easier to share the videos with friends if it doesn't feel like it opens with a commercial. Thanks again." Couldn't agree more. Phenomenal feedback. I listen to the people. Hey, they can say what they want about me, but one thing they can't say is I don't listen to the people. You guys make this show. I literally read every single comment. So I really appreciate this. I think you're right. So for those that missed last week, I'm the founder and CEO of two companies. They're Bitcoin companies, obviously. What else would I do with my life? So it's Strike. I founded a Bitcoin financial services firm. We're one of the biggest in the world at buying and selling, borrowing, all that good stuff. We'll talk about it later. And the other is 21. We're filed to go public. We confidentially filed an S-4 with the SEC. We, in escrow, own a lot of Bitcoin. I'm going to give updates on my businesses at the end of the show from now on. Okay, so if you're interested in my businesses, if you're a customer, if you care at all, great. Stay to the end of the show. It'll be after my one long rant, my one big macro rant and news, and before Q&A. If you don't care about my businesses, doesn't hurt my feelings. I respect that. Free market maximalist. And you could skip it. It's not going to hurt my feelings. But in that way, it's not going to be a commercial. I don't want to look and feel and sound like a salesman because that's not the point of this show. All right. With that, hopefully that was short enough. On we go. My title today is "The Fiscal Engine is Failing and Bitcoin is the Spark." We had a really big week last week, especially when it comes to economic data. We got to see a lot of what's under the hood in the macro environment with the fiscal situation in the US. And if you guys did notice, Bitcoin fell a little bit. Stocks fell a lot a bit. So we clearly had some sell-off. We clearly had a little bit early signs of risk off. And so that's why the title is "The Fiscal Engine is Failing." And I do think Bitcoin can be a spark. We've talked about the Bitcoin stablecoin tandem, the combo, the 1-2 punch. People don't know that I used to box when I was a kid. Don't try me. The little 1-2 punch, Bitcoin stablecoins for the United States government, and can Bitcoin be the spark to this failing engine, this dog shit engine, this broken car? All right, let's get into it. Here's the big news. Here's the big news from last week, in my humble opinion, okay? In my humble opinion, it's the Treasury announcing their new estimates. So the TLDR, this is from the Treasury's website, so from the government, the TLDR is they shifted $450 billion of new issuance from Q2 to Q3, okay? Let's slow down and unpack this, because if you can interpret this and understand this, it's going to tell you a lot about how they've been treating Jerome Powell, how they've been treating stablecoins, and how they've been treating Bitcoin. On the show, we've been guessing. Educated guesses, don't get me wrong. Educated guesses, in my opinion, Accurate guesses. Not too shabby guesses, but guesses nonetheless. Now we're starting to really understand the meat of it, the truth, the data, okay, that's backing our guesses. It looks like we were right. Us Bitcoiners, us here on the Jack Mallers Show. Okay. The U.S. government has to issue debt to finance itself. Okay. It's effectively asking people to lend it money, and those people could be nation states like Japan or the UK. Those people could be hedge funds like we talked about in the Cayman Islands. Those people could be funds on Wall Street. Those people could be its own commercial banking system. Those people could be individuals. But the U.S. government is asking people around the world to lend it money. And in return, the people that lend it money get an interest, and they get paid to lend the U.S. government money, and the U.S. government pays to borrow money from us all, okay? And they do that in the form of this used treasury bonds. Now, the U.S. Treasury came out and said, we were gonna issue $450 trillion worth of new debt to finance ourselves, $1 billion of this new debt to finance ourselves in Q2, but we didn't, okay? We are saving it, and we're going to issue it in Q3, okay? That is the big, like, whoa, everyone pause the brakes, and that's what caused Bitcoin to fall a little bit, and that's what caused the stock market to fall a lot a bit, okay? If I actually zoom in here, I can show you guys. During the July-September 2025 quarter, the Treasury expects to borrow a little over $1 trillion. You guys see that here? And the borrowing estimate is $453 billion higher than what was announced in April, okay? So that is the shot heard around the world. Now, let me explain to you why. This is the U.S. government bonds 10-year yield, okay? If the U.S. were to be issuing less debt, then yields should have come down, okay? Now, guys, please, every single episode we do live Q&A. So for those of you that already know this stuff, I'm sorry if I'm mansplaining or if I'm oversimplifying and if this is boring, but a lot of this show is for those that don't know this stuff. So please ask questions. It's really critical that you understand the inner workings of the shitty fiat system if you want to make sense of the world around you, in my opinion. Now, as a Bitcoiner, do you have to understand the fiat system? No. The coolest thing about Bitcoin is you could stay humble, stack sats, go to a beach, and win. That's what Bitcoin empowers you to do. But if you're listening to this show, I assume you kind of want to know what the hell is going on. Hell, I do. I want to make sense of the world. I want to have my own opinions. I want to have my own thoughts, my own basis for how I want to exist and live. So please ask questions. Now, the reason that this chart shouldn't be trending up and should actually be trending down is because with less debt issued, there should have been, it shouldn't have, what this is saying is there's not a lot of demand for U.S. debt, okay? Because here, let me just skip to this slide real quick. I should have reordered this differently. This is bond math, okay? It's not necessarily intuitive. Bond prices and yields move oppositely. If yields go up, bond prices go down. Okay. Now, if you just think about that for a second, it's actually very intuitive, right? If the U.S. needs to strum up more demand for its debt, they pay you a higher yield. If the U.S. says, hey, we're looking to borrow $450 billion, and everyone says, cool, how much do I get paid for that? And they say, 1 basis point. Everyone says, oh, screw that. Okay, what about 2 basis points, 3 basis points, 4 basis points, right? And so the point is, yields go up, bond prices go down. The higher yields are, obviously, is going to tell you that there's less interest in lending to the government. If everyone was head over heels interested in lending capital to the government, and they're willing to pay any price, it doesn't matter. They just want to lend to the greatest country on earth. Well, then the U.S. wouldn't have to pay them that high yields. If the U.S. can't find a lender, then yields are going to go up, which means the price of a bond goes down. Now, going back to this, if the U.S. was not issuing a lot of debt in Q2, it tells us something. What does it tell us? They think the treasury market is fragile. They're concerned about how many people around the world have a willingness to lend to the U.S. government. They are delaying the debt issuance. Now, for a few reasons. One, because there's clearly not a lot of demand. And two, because of rates at the Fed. Oh, my audio's not working, huh? Hold on. Oh, boy. I hear you guys. I don't know what to do, though. Some of you guys' audio's good. Some of you guys' audio's not. Hold on. For those listening on the podcast airwaves, I'm getting blasted for my audio being terrible. But audio's good. I sound good. Okay. Well, okay. False alarm, I guess. Apologies for that. Can't tell if you guys are fucking with me or not. But the show goes on. So listen, guys, the point is the U.S. government did not want to issue their debt in Q2, primarily for two reasons. One, because there's not a lot of natural buyers for the debt anymore. We know China, the global factory, the country that runs $1 trillion trade surplus, they have not been net purchasers of U.S. debt since 2014. We know they're buying a lot of gold. We sanctioned Russia out of our financial system, so they can't even finance the United States even if they want to, right? And we've known that the United States has had a tough time finding marginal lenders to finance its deficits. We've talked a lot on this show about how there are a lot of hedge funds running a basis trade out of the Cayman Islands, but even that trade started to dry up a little bit. So we can sit here on the show and we can speculate about these things. We can try and draw conclusions based on tweets, based on market sentiment, but to see it come out from the U.S. Treasury is very validating. The other reason is very obviously because interest rates. If you're going to be issuing debt and the 10-year is above 4%, and the Fed funds rate, the overnight rate is above 4%. That's very expensive. They just said they're now in Q3 expect to borrow over $1 trillion. Can you imagine having to pay 4+% to borrow $1 trillion? That's a really big bill that you have to finance. That's a lot of money. And so for those two reasons, the United States is literally financing itself on a quarter-over-quarter basis. Talk about living paycheck by paycheck. What's the nation-state equivalent of living paycheck to paycheck? The nation-state equivalence is we have to borrow about $500 billion a quarter. The United States has already come out and said we will borrow and we will have a little over $2 trillion deficit this year. So our run rate is, call it $500 billion a quarter, okay? And delaying our $500 billion because we can't get the rate that we want and because there are not natural lenders to us anymore. Now, how do we know this, guys? Because we can look at the market. So this is the U.S. government 10-year yield. And this is, now it's choppy, obviously, but you can see in the beginning of Q2, it was low. And now it is higher. So yields rose. That means bonds fell. That means demand for debt was shrinking. And this is despite an artificially scarce supply. We took debt issuance out of the market. We did not dump more debt onto the market. And yields still rose. Bonds still fell. So this is a huge problem. On top of that, here's from Bloomberg. The dollar got stronger. Dollar wraps up first month of gain since Trump took office. So we talk about weaker dollar, weaker dollar, weaker dollar. And the Trump administration is clearly in line with what is called the U.S. Dutch disease, is the pain of having a strong dollar. A strong dollar means you do not have cheap labor. It means you cannot manufacture. It means you cannot self-sustain. It means you have to hyper-financialize. It means you export everything, including your health, including your culture, which we'll get into in a second. And so we're seeing tiny little cracks in the fiscal engine right now. There are no lenders to the United States of America. They cannot get the Federal Reserve to lower interest rates. They are delaying debt issuance. There's going to be a ton of debt issuance in Q3, and the market is reacting to that immediately. It immediately became risk off. And what the market was showing us late last week is if you guys don't fix this shit, if you guys don't get the Fed to cut, this is going to look bloody. This is going to look bloody. Bloody, 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 bloody. Okay? So again, just to repeat, the way bond math works is when yields go up, the bond price goes down. Yields up, bond price down. It's the same way of saying nobody wants to lend to this broke-ass country that's in trouble. Fiscally in trouble. Now, I'm American, greatest country in the world. Look, I'm still in the empty closet. Does it look like I'm moved? No, I'm here. I'm going to fight. I'm going to build the future of this country. We're going to use open source software. We're going to use sound money, and we're going to build the future of this country. But we're in a fiscal mess. There is no doubt the post-1971 dollar is dead, and a new monetary era is underway. Okay? So, TLDR, I love this slide because I took the look at these two hard hat men. Unbelievable. This is the state of politics, the government, and our financial system. The Fed needs to cut because the Treasury is flooding the market with debt, and foreign buyers aren't stepping in. If the Fed doesn't absorb the pressure, yields will rise, which means bond prices will fall, liquidity tightens up, and everything sells off. Again, this is what we saw late last week. So the biggest news from last week is when we realized, holy smokes, yields rose, bond prices fell, and the Treasury didn't even issue all the debt it needed to. It's trying by the whims of the tip of its fingers to hold on for dear life, and they still can't figure it out. No wonder, guys, no wonder they've been hammering Jerome Powell. Now it makes, how much sense does it make? It makes all the sense in the world. Hammering Jerome Powell, hammering this guy. And so they need the Fed to cut aggressively, like overnight, or they need stable coins to explode in growth. They need to find new dollar demand, new demand for the debt. Okay? That's really the point. So, what do we see as a result of this? Well, the hammering of Jerome Powell will continue. It will not stop. If anything, it's going to just get worse. One way out of this is to reduce the cost to issue debt. If they can get rates to as close to zero as possible, then issuing debt is free. It doesn't cost anything. They are going to hammer this guy, hammer him over the top of the head. They're going to try and embarrass him. They're going to try and find ways like irresponsible budgeting for his new office or whatever to try and kick him out. Now, this is Trump. This was August 1st, so only a few days ago, demanding he resigns. So these guys are very careful with their words, by the way. Trump has been hammering him, but has never outrightly said he should resign. Now we're at the point where he says, get out, he should resign. Okay? Now, what else have we seen? Guys, this is whitehouse.gov/crypto. I'm going to repeat that. There is now a website on the whitehouse.gov website. There is now a domain, whitehouse.gov/crypto. This is not a drill. President Donald J. Trump is strengthening American leadership in digital financial technology. So here's the thing, guys. We now know, like the market now knows, and it's the reason that it's sold off, that there are no marginal lenders to the United States government. The U.S. Treasury market is in trouble. Risk assets and everything is going to sell off like it has. We're going to have a repeat of Liberation Week, of Q3 last year. We're going to have a repeat unless something happens. And the U.S. government is going to go do two things. My prediction, we'll see. They're going to continue to hammer Powell. Now we know why they've been so hard on this guy. They need those rates down like they need air, or else the stock market and everything with it is going to come crumbling down. And the second is they need Bitcoin and stablecoins to go higher. Whitehouse.gov/crypto. I've been in this space for 13 years. Never in my life did I think we would have a web page on the White House website. And let's be clear, it should be whitehouse.gov/Bitcoin. I don't own any other shit coins. I will never own another shit coin. Shit coins aren't my thing. So the whole crypto thing, but they'll get there. They'll get there. Or honestly, they might already be there. But the point of that, there's a splash page on the White House website now. And here is our boy, Secretary Bessent, who's out here wheeling and dealing debt. Here he is.
This afternoon, I'm laying out.
Putting out a crypto hype video. This is like a TikTok almost.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet.
We are going big on digital assets. So Trump administration has made digital assets a priority. With the passage of the Genius legislation last week, I think that we could see several $1 trillion of demand.
Several $1 trillion worth of demand. Okay, so there's now a White House splash page. Bessent is putting out like TikTok hype. I feel like that's like what the Chicago Bears tweet as we enter preseason. That was like a hype video. That was like a locker room video. Okay, let's continue to check in on stable coins. Tether just released their quarterly attestation. This is the king of stable coins, the inventor of stable coins. Let's check in with how their business is doing and growing. Yeah, I would say these things are skyrocketing. And what we know is that the fastest way to grow stablecoins is to grow Bitcoin. Again, listen, guys, am I a stablecoin maxi? Am I a stablecoin user? No, I live in the United States of America. I don't need stablecoins. They do nothing for me. I already have digital dollars. I was born in 1994. I've had digital dollars my whole life. By the time I had a cell phone, things like Venmo and Cash App existed. I never need stable coins. I don't want stable coins. Why does the U.S. want stable coins? Because they are natural lenders to the U.S. government. Why does the rest of the world want stable coins? Because BTC USD is the liquid pair against Bitcoin. So if you are not in the United States and you want liquidity, you get it in USDT. If you are in Nigeria, if you are in Turkey, if you are in Argentina, and you want something that isn't Bitcoin to hold digitally, you hold the digital dollar, not the Naira, not the Ghanaian Cedi. It's obvious. And so look at these numbers. They now hold over $127 billion in U.S. Treasuries. They are now one of the most active lenders to the United States of America. Next, Goldman Sachs and BNY joined forces to transform $7.1 trillion money market industry with digital tokens. Guys, what did we say last episode? There's over $7 trillion in money market funds. When we lower rates, they're going to activate this. With the Genius Act, they're going to activate this. It is now a lot of the things that we've been talking about on this show, and we've just been guessing. Educated guesses, really good guesses. Bitcoiners, we know what we're talking about. We stick it to the man. But now they're starting to come true. We're seeing how fragile the U.S. Treasuries market is because they can't even issue the debt they need. We're seeing how fragile the relationship with the Fed is, that they're willingly trying to fire this man, an independent bank, because we can't finance ourselves without making our own decisions on the cost of money. We're seeing how valuable Bitcoin and stablecoins are to this country because they are the liquidity escape valve. Goldman Sachs is one of the most politically aligned, too big to fail banks in the United States of America. Goldman Sachs and Chase. The fact that they are going to digital tokenize stablecoin, the money market fund, ignore everything about this headline except the number. 7.1 trillion. That's all you need to know. 7.1 trillion. That's all you need to know. Next, Treasury Department will boost debt buybacks from the Wall Street Journal. We heard a lot from Bessent earlier this year about the tactics he was going to use to help the U.S. government survive and fiscally afford itself. We heard Treasury buybacks. We heard the supplemental leverage ratio. We've heard it all. And he talked about how these things would start to come to fruition over the summer and early fall because he needed to negotiate trade deals first. Those trade deals are starting to come due. You've seen a lot of that. Trade deal with Europe over the last week came due. Now you're starting to see, here's how this works, guys. If you can't win the game, change the rules. That's how these guys play. If you can't win, we will change the rules. That's why you cannot save in dollars. That's why we cannot coexist in a fiat currency system. And so this is these guys changing the rules. They're going to go after Powell. They're going to pump Bitcoin and stablecoins. They're going to change the rules. Those are my predictions. Now, this idea, let me move my head so I can read this full tweet here. This idea that Bitcoin is becoming strategic to the U.S. government is starting to pick up steam. I have put forward an argument the Trump admin wants Bitcoin to act as a liquidity sponge to limit the impact of their grow our way out strategy. We've been talking about this on the Jack Mallers show for quite some time. Now, this is a fascinating way to look at it. This is the federal government current receipts in blue and Bitcoin in red. And the idea is the higher Bitcoin goes up, one, it acts as a sponge. So limit the impact of grow their way out, meaning run it hot, lower interest rates, lots of liquidity. In theory, that's highly inflationary. But if all of that liquidity concentrates into things like stablecoins and Bitcoin, then it's very limiting to how much eggs will go up in price, how much gas will go up in price. Can we somehow limit certain aspects of inflation at the margin? Now, I don't think that that's going to be possible. I think inflation is a natural response to the creation of new currency units, but we'll see. But the notion that Bitcoin is very beneficial to the U.S. government, it acts as a liquidity sponge, it helps debase the dollar against something neutral, gold and Bitcoin. We've talked about this over and over and over and over again. And now we also know that Bitcoin has some correlation to the federal government current receipts, meaning this: Bitcoin makes people rich, and then those people end up getting a house, getting a boat, getting a college degree, getting a vacation, and they pay taxes on those capital gains. Now, you can now borrow against your Bitcoin with Strike. I haven't sold a Bitcoin since, but this idea is starting to get popular, guys. This idea is starting to get popular. This administration is clearly very focused on Bitcoin, very focused on finding new marginal lenders to this country. And now we're starting to see correlations between the federal government current receipts and Bitcoin's price. This is not a drill. Bitcoin will be one of the liquidity sponges. It'll be Bitcoin and gold. Debase against a neutral asset because everyone else needs to buy something too. China, Russia, we've already seen it. So this is a really validating week the last week. Now, I know Bitcoin traded down, but we know why Bitcoin traded down. We know exactly why Bitcoin traded down. It's not a secret. It traded down because everyone got to see how naked the U.S. Treasury has been swimming and how brutally fragile the Treasuries market is. Okay. Next, we talked about the U.S. Dutch disease, how painful it is for the U.S. government to have the world reserve currency, how painful it is to have a strong dollar. It ruins the inner fabric of society. For those new here or those that want a reminder, listen, when you are the world reserve currency, your job is to export the currency. Instead of producing food, instead of producing oil, instead of producing technology, instead of producing hardware, your job is to produce the currency. And so you run deficits, you print the currency, and you ship it out. And you get the real stuff that you all consume in return. It gives artificial strength to your currency because everyone has natural demand for the dollar. Because it's the world reserve. They need it to trade. They need it to borrow. They have their liabilities priced in it. So they need it to pay down and pay back debt. Okay. And it gives artificial strength to dollar assets because no one can take trade surpluses and invest it in their own country. It will strengthen their relative currency. So their investable assets are all American assets. That's why the American stock market is the most valuable equities market in the world. That's why American real estate is some of the most valuable real estate in the world. Yes, America's a great country. Yes, America has great companies. But the S&P 500 is relatively flat. It's the Mag 7 that's trading at a premium. There's a concentration of foreign capital that bids up these assets. So what does this do to the inner fabric of society. Well, nobody can have a manual labor job anymore. So guys, get this. Over half of the United States of America isn't university educated. But the entire stock market is owned by university educated folks. And so what you get is a deterioration of society. You get drug addiction, you get violence. This is the percentage of 30-year-olds who are both married and own a home. This went really, really viral because Elon Musk retweeted it. So you have to understand, we chose this outcome as a country. If you want to be the world reserve currency, if you want a strong dollar, if you want to run deficits, if you want to export what you consume, this is what you get. The middle of America is ruined. Rust Belt, jobless, addicted to drugs, violence, divorce rate up. The amount of kids my age living with their parents exceeds the rate of the Great Depression. Okay, let's go next. What's happening to our kids? 100 million U.S. children studied had 5-point drop in IQ, 3.5% decrease in intellectually gifted, 3.5% increase in challenged children. Now, over the past 50 years, there's been a 35% increase in childhood cancers, 100% increase in male birth defects, and a 400% increase in obesity. Again, this is a decision that we made as a country. These are all a results of policy. If you want a more stably employed population, you need to actually produce things. If we made our own stuff, then there'd be plenty of jobs that are manual labor jobs. Jobs are highly concentrated on the coasts in Wall Street and Silicon Valley. And the middle of this country has been eroded. And for me, what's fascinating is that these ideas are starting to become popular. I mean, these are the trending tweets on Twitter. And the notion that the US government is becoming solely reliant on Bitcoin to finance its way out, and that the Federal Reserve is being nationalized in front of our face. I mean, the things that we have been talking about on this show are becoming commonplace ideas. These are viral tweets. Not Tom Brady, not the Kardashians. This is what people are talking about today. It's fascinating. So for those of you that don't know, shameless plug, but I mean, it really, even if this wasn't my own talk, I'd still plug it. So I give a talk at Bitcoin Prague. It's 45 minutes and it's a very in-depth talk about this problem. It goes through the history of money, how the US made the decisions that it made, and the results that it's bared on society. So if you guys are interested, it's on the Bitcoin Prague YouTube channel. You can go to BTC Prague and watch it. It's got almost 350,000 views in a month. So if this stuff is interesting to you, I'm not going to spend an hour on this show talking about it. That's just not the format of this show. That's not how we do things. This is more a weekly news and macro views type of show. So if you want more in-depth, if you have 45 minutes to spare, I highly recommend it. It was probably the most emotional talk I'd given, but packed with the story that we kind of just covered a bit there. Cool? Okay, so there we go. That was about 30 minutes of macro news. And what did I just say? I like the way I said that. Something news, market news and macro views. Let's trademark that, Dill. Trademark that one. Market news and macro views. So that was about 30 minutes of that. To me, the big news was the fact that our treasury market is too fragile to finance the U.S. government. Jerome Powell's going to get beheaded. Crypto. It's stable coins. Stable coins are all the rage because they're the new marginal lender. This is the new petrodollar, is this stable coin thing. Tether's growth is exploding. I expect Bitcoin to lead. Bitcoin is the thing. Bitcoin lifts all boats here. Bitcoin lifts all boats except the dollar. It shrinks the dollar. which is what the U.S. government wants. And I expect Bessent to start changing the rules. They're losing the game, so they have to change the rules. That's how these guys play. It's not fair. Oh, we're losing? Look at the scoreboard. Oh, we're down? Okay, let's change the rules. So I expect them to increase treasury buybacks. I expect him to change the supplemental leverage ratio. I expect them to find a way to grow stable coins, whether it's these big, large institutions turning things like money market funds into stable coins. And by growing Bitcoin and supporting Bitcoin, I do think that the U.S. government is not done with their strategic Bitcoin reserve. I expect them, when the time is right, to go out and support Bitcoin. Also, can I say on that point? So here's a slightly hot take. I know that the U.S. government has kind of let us down in not giving us the full audit of how much Bitcoin the U.S. government owns. That's just a fact. Like they said they would, and they haven't. Now, the slightly hot take that I have is clearly that information is sensitive. Okay, or else they would disclose it. And Bo Hines, one of the representatives of the White House, came out and said, we're not ready to disclose that information. We consider that classified sensitive information at the moment. And so I think what we all need to be asking ourselves is, why is that sensitive information? What's sensitive about that? And you get a really big clue there, guys. I think that the U.S. government is ashamed of its Bitcoin position. It wants to support Bitcoin. It wants to be a leader. And they must have discovered that they're not the leader they thought they were. That's my guess. Could be a hot take. So listen, do I like the fact that they told us they'd give us a transparent audit and they didn't? No, of course I don't like that. But what's my takeaway? Is my takeaway that the U.S. government is too incompetent to count up a bunch of UTXOs? No, of course not. My takeaway is pretty simple. My takeaway is, I think that that's sensitive information because the U.S. government wants to be the Bitcoin superpower and support Bitcoin and grow stablecoins. And what they realized is their holdings are a threat to that brand identity. I think that these guys are realizing that the Democrats sold off a bunch of that Bitcoin, and they don't want to make an announcement until they can build the position back. That's my best guess. That's my best guess. Okay, so with that, that's my market news and macro views. I got a notification on Slack. Let me make sure it's not my team saying my audio stinks. Cool, it is not. We survive. We live to see another day. Not a professional podcaster. Okay, this is the part of the show where I'm going to go over some updates of my two companies. So for those of you that are customers, those of you that care, I'll keep it short, but it's definitely going to be dense because we ship a lot of products at Strike, and I know everyone's excited about 21 and our future. If you don't give a shit, I'll see you next week, or you can go take a bathroom break and rejoin us for Q&A. But next, we're doing Strike, then we'll get into 21, then we'll do some Q&A. Probably got 20 minutes left of the show. We'll do half company updates and then half Q&A. Fair game? You guys give me feedback. Hopefully this is a better format. And if you want it to even change next week, you just leave a comment. Let me know. Man of the people, they say. Man of the goddamn people. Okay, let's get into Strike. So, Strike, I think, is one of the most high product velocity companies in Bitcoin, period. We ship like crazy. And so I'm actually really excited about this format in this segment because this is a place for me to actually update in detail those that give a shit about Strike because we ship like 2 to 5 products a week. It's insane. I mean, the company is only 75 people, roundabouts. I'm using round numbers more or less. And it's just an incredibly talented team. So I'm front running some of our announcements. So for those that listen on the Jack Mallers show, you're getting a little alpha. You're getting a little preview because I will make this announcement formally tomorrow. So, hey, let's keep it our little secret here on the Jack Mallers show. But, I figure it can't hurt. If you guys are listening to me and you're listening to this segment, it means you care and you support us. And it really means a lot. I support that. So I'll give you a little alpha. I give you a little edge. So for those of you that have a business account on the platform, our business accounts are up hundreds and hundreds of % this year. We've really invested in making sure that business accounts on Strike have an incredible experience, and we just now are rolling out business bill pay. So this announcement will go out formally tomorrow. If you go update your app or you go log into your dashboard as a business, you very likely can pay bills both with your cash on Strike and with your Bitcoin. Yes, you can pay bills with your Bitcoin on Strike now, both for individuals and big businesses. And really for me, I mean, I'm a business customer on Strike. I onboarded Strike to Strike. Strike, the company, uses Strike, the services, to run our business. And for me, it's amazing because we have a checking account. So we get to use wire transfers, ACH, real-time payments as well. There's instant withdrawals. We get to use buy, sell Bitcoin. So Strike, we stack a lot of sats. Obviously, we own over 1,500 Bitcoin in our corporate treasury. Not bad for a small startup. And we are very profitable. So we sweep all of our monthly cash flows. So Strike, we actually buy Bitcoin every single day. We use the Bitcoin wallet to store some of our Bitcoin, pay employees. We have certain payments and invoices that we handle in Bitcoin. Borrow cash. So we own, almost $200 million worth of Bitcoin now. If I needed to go get a license somewhere and it cost me $1 million, I now have the opportunity to actually borrow against our corporate treasury instead of issuing equity and taking on dilution, instead of taking cash flows and getting a license. We can continue to sweep our cash flows into Bitcoin like a corporate DCA. We can continue to hold our equity and not dilute ourselves. And we can actually borrow against our Bitcoin as a company and finance our future that way. And then now we can pay bills. Now we can pay fiat expenses. So at Strike, we have all sorts of bills that run the company. We have cloud servicing bills, we have credit card bills, we have payroll bills. And so Strike, for our business accounts, now are full suite. You can pretty much do everything that you need as a business as it relates to Bitcoin. Checking account, buy, sell, Bitcoin wallet, borrow against your Bitcoin, and pay your bills. So it really is an incredible service. I highly recommend, if you're a business, check it out. We have a ton of new business accounts that are onboarding, because even if your business is on another platform, one of these services is not where you are. This is a very unique and rare set of services for businesses within the industry. So we're really proud of it. The growth has been stellar. If you are one of these businesses that are already a customer, I really appreciate it. We really appreciate it. And we're just really proud of how the product has turned out. So we're not done yet. We're going to keep shipping for businesses. I know interest on cash is something you guys are interested in. And so I know we're working on that. But this is a really big deal. This is a really, really big deal. Some of the biggest borrowers of cash against Bitcoin, our Bitcoin collateralized lending product, are actually businesses. So it's very cool. Okay, now I'm front running our announcement that's going to be on Thursday. So again, listeners of the show, I love you guys deeply. This is our corner of the internet. I'm sure this will get clipped and tweeted and whatever. I'll live with that. But just a little alpha for you guys. We've launched the Australian dollar support. So Strike, we've added our 4th fiat currency support. So we support the US dollar in the United States. We support the euro in Europe. We support the British pound in the UK. We now support the Aussie dollar. And for businesses in Australia, we will be rolling out lending. Okay. So you will be able to borrow Australian dollars if you're a business in Australia against your Bitcoin. And for Australian customers, you can now deposit AUD, withdraw AUD, and you get the full Strike experience. So just a reminder of our product, we have dollar, euro, pound, Aussie dollar. And then for our other markets, like in Latin America, like in Africa, we support stablecoins in the form of Tether. And so we continue to focus on international expansion. We think that we can be one of the rare financial companies that can serve billions of people in their local economy, because Bitcoin ties us all together. It really empowers us all. So this is a very, very exciting update. I know that everyone in Australia has been dying for this support, and it took us long enough, and I'm excited to get it to you guys. Next, we also rolled out our lending product in Colorado. So some of the biggest feedback I get on a weekly basis is when my state, when California, when New York, when Europe, when UK. We are working on it. Unfortunately, on a state-by-state basis, and different regions around the world like the UK and Europe, they're all regulated differently when it comes to lending. There's a lot of consumer protection around getting a loan. And so it's not up to me. We were able to get one giant batch when we initially launched. And then each state, we're working heads down. We're working really hard. And we're going to get access to everybody as fast as we can. It's just going to take us time. So big update for those of you in Colorado. And as you can see on the screen, as low as 9.5% APR. That's the only fee you're paying. So there's no origination fee. A lot of these other companies, they say, oh, yeah, we have the same pricing at Strike, but it's a 2% fee to open a loan. So it's way more expensive. We don't do that. No shade. It's that one of the cool things about Strike is you can buy your Bitcoin with us. You can no fee DCA with us. There's free withdrawals to cold storage with us. You can get a loan with us. You can pay bills with us. And so we are a very profitable business. We don't need to make all of our money on one specific product. If you come do your Bitcoin stuff with us, you're going to get really competitive, if not best in class pricing across all of our products. And so we only charge you one fee when you get a loan. It's the APR, no origination and fee, no early repayment fee, no rehypothecation. You can now open up to 5 loans. And in the month of August, we expect to ship refinancing in the app as well. And then I think within this quarter, if not, it'll be early Q4, some form of a margin loan. So we're going to continue to make this product better. It's only been live for, some months, and we've already given out hundreds of millions of dollars in loans. We're one of the biggest lenders against Bitcoin in the world already, and we haven't even gotten time to make the product incredible. So I'm excited because it's only in half America for individuals, not in Europe yet, not in the UK yet, and we haven't even put our full product force and our beautiful design and our incredible engineering. So we're just going to keep making this product better. So be on the lookout for that, but congrats to everybody in Colorado. Shout out to you guys. We're excited to serve you. Next for Strike, I told you guys we ship a lot of shit. So give me feedback if you want all of this, if you want some of it, but I'd be shocked if all of you can keep up with this on Twitter. So I'm kind of glad I get a segment now to kind of walk through for those that care. We launched Strike lending widgets. So one of the feedbacks we got is people that wanted a widget to keep track of their loans on their home screen. So you can now, on both iOS and Android, you can set up widgets on your phone for lending. So if you're one of the folks that actively finances your life with loans against Bitcoin, I'm one of those people, then you're more than welcome to set up a widget. Really cool user experience. Shout out to our client engineers. Our iOS and Android apps are incredible. We actually surpassed, I think, his 4.8 star rating on the Google Play App Store with over 1 million downloads. So Strike has over 1 million downloads on Android and one of the highest finance ratings in the App Store. So incredible user experience, incredible design, incredible customer support. These guys and gals kill it over on the Strike team. So just really, really good stuff. Okay, that is what I got for the Strike side. Some of those announcements you guys will see throughout the week. I will record my videos and post them on Twitter and YouTube like I always do. So give me feedback. Do you guys find those useful? Do you want to hear about more stuff, less stuff? Just let me know. Now on to 21. 21 is a company I co-founded with Tether, who we talk about on this show as the king and creator of stablecoins. We're launching a Bitcoin native business that we're looking to take public in the capital markets under the ticker XXI. The business is called 21. So just a few updates. We made some news last week. You guys probably saw, but in case you didn't, we expect to add 5,800 Bitcoin before the planned listing for total holdings of at least 43,500. Just a few comments on this real quick. I see a lot of people on Twitter that are interpreting these words maybe a little, well, here's what I'll say. 21 right now has filed to go public. We have not been approved yet. And so we're kind of in this in-between phase where we need to see if our SPAC merger with Cantor Equity Partners is approved by the SEC and goes through. So until that point, we can't really say things like we bought Bitcoin because the merger hasn't gone through. So we say things like we expect, because if the merger does go through, then we will. But if it doesn't, then we won't. And so, I just would just want you guys to know, I wouldn't, read this too technically. Our intent is to have all this Bitcoin, but we need to get approved first. And until the merger is successful, then it's not our Bitcoin yet, right? And so you guys should know that. Hopefully that's clear. I see some people on Twitter confused sometimes. And so just want to try and provide as much clarity as I'm allowed to. But the point of this announcement is that we initially said we wanted to have at least 42,000 Bitcoin by the time we got approved. And we actually were able to raise that to 43,500 Bitcoin. So we've upsized our pre-approval BTC treasury expected before approval. It's held in escrow. Be clear here. Shout out my lawyers. And I think it just shows how successful 21 has been to date, how much demand there is for what we're doing, how much demand there is for Bitcoin in the capital markets, and just how big this thing can be potentially. So with this announcement, we're heads down working on getting approved. I'm trying to get the stock listed on a public stock exchange under the ticker XXI. So for those that want some more detail, we did issue a press release. So if you are interested, we have our sats per share down here. I thought, as a Bitcoiner, I thought this was the coolest thing in the world. I don't know if I've ever seen sats per share in a press release for a company worth billions of dollars. So this was a cool moment for me. Very fun. Also, 21's average cost is just over $87,000 per Bitcoin. So for a company that was announced in April, again, not too bad. Really, really good average price there. Very proud of the team. And this was my quote in the article. We believe Bitcoin deserves a public company worthy of its ethos. With the capital partners, capital team, the structure we've assembled, we feel like we can do anything, and we're just getting started. We're a new kind of public company built on Bitcoin, backed with proof, driven by a vision to reshape the global financial system. We're not here to beat the existing system. We're here to build a new one. That's true. So founding group of Bitcoiners, every single member of our founding team has been in Bitcoin for over 10 years. We are OGs, as they say. And I had mentioned backed by proof. That's in reference to our proof of reserves. So for those of you that are interested and you want to see our proof of reserves, so again, I've seen people that say, oh, they intend to buy, or they expect to add 5,800 Bitcoin. Well, I expect to win the NBA finals, but I can expect anything. Well, our Bitcoin is here. So we say expect at least 43,500. Well, it's here. It's 43,514.12 to be exact. So you guys can all go check this out and prove it for yourself. You do not have to be an expert in interpreting legal language when it comes to quiet periods in the capital markets. You can just go look at our proof of reserves. That's kind of the whole point of Bitcoin for me, is you don't have to necessarily trust me or interpret my legal language when I tweet stuff related to 21 right now, because we're in a quiet period. You can just go look at our proof of reserves. So if you want to see the Bitcoin that we have it sitting in escrow, you can go to xxi.mempool.space. That's what this is. Here, let's see. That you guys see the URL at the top here, xxi.mempool.space. And that is where our Bitcoin in escrow is sitting. So that's really all the 21 updates I have for now. Obviously, I'll be allowed to talk in a lot more detail, assuming we have some outcome with our pending application to be listed as a public company. So, yeah, I don't know if you guys have any more questions, but when it comes to 21 and the capital markets, that's just about as much detail as I can provide you, more or less. So I don't trust Jack, but I like him. Sounds complicated. I'll take it, though. That's okay. You don't have to trust me. Okay, cool. Let's get into Q&A. That wasn't too long. It was a little longer than I wanted to. We're trying out the new format, but it wasn't too long. So let me blow up my beautiful face. Oh, look at this guy. Someone said, I can't tell if Jack is 50 or 15. And ever since that comment, it's been tough to look in the mirror. I'm not going to lie. All right, let's do some Q&A and try and get you guys out of here in a timely manner. Okay, first question, macro. How can you say that there isn't any demand for 10-year treasuries, but the 10-year is only just above the overnight rate? Do I misunderstand something? I would say that it's not an entirely free market. I would say that the supply issued into that market has been relatively dry for quite some time. And so if you really wanted to test the demand for 10 years, why don't you finance yourself entirely with the 10-year? If it's infinite demand at a little over the overnight rate, the answer is there is an infinite demand at a little over the overnight rate. Every single time that market is tested, it spirals into dysfunction. So it's like, if I go out and create a lemonade stand outside my house and say, lemonade, $100 per glass, and I look around and say, what are you guys working all hard for salaries, commuting to work, clocking in early and getting off late? I'm selling lemonade for $100 a glass. How many have you sold? Oh, one. Well, can you sell 1,000 at $100 a glass? No. Okay, well then that's not a real price. So I would challenge the notion that there's like tons of liquidity and depth in the 10-year. I think it's a fugazi. But I hear you. There's some buyers for sure. We know Japan and the UK buy, but I don't think it's as real a market as the United States wants you to believe. Could you please explain in detail how having the price of Bitcoin go up means that the price of stablecoins go up? As I understand, if the price of stablecoins goes up, they need to buy T-bills, but I don't see how Bitcoin and USDT are connected through a direct price in Bitcoin. And by price of stablecoins going up, I think you mean the market cap of total issued stablecoins, which is what matters. Obviously, a stablecoin is always going to be worth $1. So the price of stablecoins, if anything, will go down in Bitcoin terms over time. What I mean is, the most liquid trading pair against Bitcoin in the world is BTC USDT. It is the liquidity to Bitcoin globally. And so, here's another thing, guys, that you should understand. Coinbase just came out with their shareholder letter. Actually, why don't I just pull it up? That's what this show is about, right? I will just pull up Coinbase's shareholder letter and walk you guys through this. So this is Coinbase's Q2 shareholder letter. I was actually reading it this morning, getting some insights for how I want to strategize Strike. There's some interesting stuff in here, but that's not for this call. That is probably for my executive call. But here, this is the part I found pretty fascinating. Let me blow this up. So they break down their trading volume by asset. And in here, you can see that Bitcoin is king. So you can see, Bitcoin trending between 35 and 25%. And that's just Bitcoin is the king of the jungle. All these other things are dog shit. But what I don't think is necessarily intuitive to people is that Tether is second. Okay. People would think Ethereum is second all the time, or Ripple. No. Tether is. So, the fact that there's been quarters for a $100 billion public company that operates in this space, and the two most liquid assets on the platform are Bitcoin and Tether, tells you everything you need to know. BTC USDT is the most liquid pair because it is the default trading pair for every market outside the United States. And so if Bitcoin's price goes up and there's more liquidity, so listen, if Bitcoin goes from 2 trillion to 4 trillion, then global trading volume is going to also double. And that means you need more tethers to support the market. These things are minted really tightly correlated to Bitcoin's price. Stablecoins have varied, stablecoins ratio to Bitcoin. So Bitcoin's always been at least 2.5 times the size of the stablecoin market to upwards of 10 times the stablecoin market. So if Besant says, stablecoins, I think are going to get to $2.5 to $3 trillion in size. Well, okay. That means that Bitcoin is going to have to get to, 7.5 trillion to 30 trillion, which implies a Bitcoin price of, 500,000 to 1.2 million or something like that. So that's really the idea at the end of the day. The quickest way and the best way to grow demand for stablecoins is just to send Bitcoin higher. And we know that through historical data and just the notion that Tether is the default trading pair against all of these things. Bitcoin is the thing I care about, but all these other pieces of shit. Tether is the reserve, fiat currency pair against this new monetary system. Does that make sense? So at least that's my interpretation. We'll see how it plays out. Okay, strike question. Can we get a direct deposit to collateral, like say 50% or whatever of my paycheck? Yes, absolutely. Someone tweeted this to me and the product team. So yeah, I think Strike's going to continue to become like the coolest product in the world. I currently get my direct deposit to Strike. I live on Strike loans. I use Strike Bill Pay to pay off my credit card. So I live my life pretty much entirely on Strike, and then I use whatever credit card gives me the best rewards. And there are definitely ways where we can take the direct deposit and allocate it to add to your loan collateral. We can take a direct deposit and continue to issue more of a loan, like a margin type loan. So like as money is coming and going, we're giving loans in real time. I think there's just so many cool things we can do. We're really just getting started. I mean, the product's not even fully available in all states. So really exciting stuff. So keep the ideas coming. A lot of our product roadmap is inspired by you guys. So I think that was a great idea. What is a recent story you can share about how Strike helped someone internationally? Good one. I would say we shipped, let's see if I could pull this up too. Hold on one second. We recently shipped virtual accounts, virtual USD accounts for people internationally. So this is in the market. This is not Australia, not UK, not EU, not US. And, oh, I see my president of the company typing. Yeah. So we recently shipped these virtual accounts, and I want to share, yeah, she just resent what I was just downloading. Look at that. Great minds think alike. Sorry, it's just taking me a second to pull this up, but I got it now. Open with Chrome. There we go, baby. Let me shrink my face again. Yeah, this one. So I think this tweet, or this post on Nostr, since Strike allowed Colombians to cash out to their Colombian bank accounts, I've been able to orange pill at literally 100% success rate. Strike have made it so easy for people to use and give unreal customer service. Jack and the Strike team are setting the bar very high, top work. Yeah, so we enabled these Strike US dollar virtual accounts. So anyone internationally can wire or ACH in dollars, and they can wire ACH or use RTP, so these instant US dollar bank transfers. And so it really makes it so much easier to get money into the app and then actually make your Tether or your Bitcoin on the app functional. So, you know, I've used this all the time. If I need like one time I was traveling from an airport to the hotel and I needed to stop at an ATM and get cash, and I don't own any dollars, so there were no dollars in my like debit card bank account. But with Strike, I can withdraw my balance instantly. Like it gets to a Chase bank account, for example, in like 3 seconds. And so my balance on Strike is always available to me any single time I need it in another bank account, like in seconds. And so people are taking advantage of this in Colombia. So I would say this is pretty incredible because this unlocks obviously cross-border payments. This unlocks people to actually live on top of Strike in all these other countries. And we've seen a ton of growth in these markets since we released this feature. So I would say this one is pretty cool and pretty exciting for us to continue to try and understand these markets better and unlock utility for them and make Bitcoin a little bit more reasonable to live with. Because I think people want 60% CAGR and they want access to stable coins, but just you have to make the product practical. If they can't make it work in their everyday life, then it's useless. So I think this was a big step for us. How do you set up a sole proprietor account to get the business suite? Just hit us up. If you guys ever want to hit up private at strike.me, that's typically white glove, concierge, high net worth, large transaction services. But if there's a specific, so I saw you guys asking what type of business do you accept an LLC? We absolutely do. LLC, any type of corp, family offices, trusts. I mean, we open accounts every day for all the above. So if you need help, you can hit up our support team or you can hit up our private team, and we're happy to white glove service you through the whole thing. So just hit us up. I mean, I highly doubt I'm going to be able to answer all of your questions in a live stream Q&A, but shoot us a note. I mean, we invest pretty heavily in support. We have on-call support here in the United States. We have 24/7 response team. So our support team is international and always online. One of our KPIs is response time. So we hold ourselves to a pretty high bar internally on getting back to you. And then you can always DM me on Twitter. Like, I think this show is proof that I do read the comments. I do take the feedback seriously. I am active in all of my DMs. So if it ever is an emergency or something that's really bad, you just DM me on Twitter and I escalate it immediately. So just hit us up. Last question. I like this one. Classic Bitcoin education. What cold storage method do you prefer / recommend? They all have trade-offs. I personally love the cold card product. So I like the cold card, but I would say it's fairly advanced. Like for someone who's brand new to the game, it might be a little overwhelming. I think BitKey and what Block and Jack has done with that product is great. A little different trade-offs than the cold card, but much friendlier user experience and still very, very secure. So those would be my two kind of high-level recommendations to get started. I would say if you're a bit newer and need to ease into the idea, I would go with a BitKey. If you're fairly sophisticated and you're debating between a Trezor or a Ledger or a cold card, I personally would recommend the cold card product. But that's just me. Cool. All right, guys. Kept it to about an hour, a little over. So I appreciate you guys. Again, the support for this show is amazing. It's really taken off. And you guys are to thank for that. Without you guys, I would just be talking to myself. I see a lot of the things with the audio. You guys are upset by that. I'll take a look at the audio. I see half the people say they had no issues. Some people said they had issues. I apologize if there were issues. Not a professional podcaster, but we'll get better. And thanks for the support. Subscribe if you haven't. It's crazy that I have a show that's this much fun and has a community now, and we're just fucking doing it our own way. It's cool. So don't take it for granted. And I'll see you guys next week. Leave feedback in the comments. What did I say? Hold on. I had my team write it down. Don't leave. Market news and macro views, baby. Market news and macro views. Much love, guys. Buy Bitcoin, not bonds. Get out of that dog shit. See ya.